So you want to start investing in real estate, but you don't have millions of dollars to go and compete in one of these bidding offers. Well, look no further because REITs are here. Hey guys, just Vaish here. If you're new to the channel, hit that subscribe button and check out my previous videos to get started on building your Canadian dividend portfolio. But this week I'm going to take a look at 4 real estate investment trusts, which are essentially a collection of real estate investments that you can add to your portfolio. Make sure to stay tuned until the end to get the whole list and let me know how things pan out in your portfolio. Real estate investing doesn't always have to mean buying a house or buying a condo or a commercial unit and renting it out to get rental income. It can also mean buying real estate investment trusts, which are REITs. So with REITs, it's very similar to the way that an ETF would be structured, such that a management company owns several real estate investments, and then they take all of the profits and have to redistribute 90% of those profits to shareholders. So as a REIT investor, you're entitled to 90% of that company's net income. So within REITs, you're getting exposure to the real estate market. You can invest in commercial, residential, and even industrial properties. And with that, all you're essentially doing is for a couple dollars a month, you're getting dividend income, you're getting real estate market exposure, and you're growing a solid income base to fund your other investments. Now, the first REIT that I took a look at was Choice Properties. And this one goes under the ticker symbol CHP-UN. And once again, this is a Canadian REIT, which is trading in the ballpark of around $14.36. And this Choice Properties has around 725 different properties totaling over 66 million square feet. And they own retail properties, which are leased to different tenants. They have industrial, office, and residential complexes as well. And one of their major clients that they lease to is Loblaw companies. So the next time you walk into a Loblaws, you can proudly say that you own a portion of their rental income as well. And with Choice Properties, they pay a 5.18% dividend yield, which is paid on a monthly basis. The second REIT that I took a look at is H&R's REIT. So that's HR.UN, which is trading in the ballpark of around $15.73 Canadian. And within H&R, what they've done is diversified their revenue streams according to the way that the market may be changing. So given the current state of the economy, where some companies may not be having their employees in the office and retail locations may be closed, H&R has done a good job of diversifying their revenue streams, where 49% comes from office space rental, 31% from retail, 13% from multifamily dwelling units, and 7% from industrial rentals. So with that, you're able to capture the gains that are offset by losses in other parts of their revenue. And there are major companies that they do business with in terms of providing rental or rental space include Bell Canada, Lowe's, and Canadian Tire. With these Canadian staples being their major sort of companies that they do business with, you're entitled to a pretty solid dividend, which is about 4.41% on a monthly basis. Now, the third REIT that I took a look at actually does business with a company that I frequently visit on a weekly basis, and that's SmartCentres REIT. So that's SRU-UN. And that's trading in the ballpark of around $29.33 Canadian. And they do about $10.4 billion in assets and own over 33.8 million square feet of retail or industrial or commercial space. And they do business with companies such as Walmart, Canadian Tire, and Home Depot, where specifically Walmart attributes to over 25% of SmartCentres' total revenue. And they provide a lot of exposure to not just retail locations such as Walmart, but also have access to commercial and industrial investments as well. And with SmartCentres, they pay a 6.36% dividend yield on a monthly basis as well. So the next time you shop at Walmart and you take your dividends to go buy a bunch of stuff, you can shop a little happier. Now, the fourth REIT that I took a look at offers you some exposure into something that we hate doing, and that's paying for parking, especially downtown. And that's Allied Properties REIT, which is AP-UN. So that's trading in the ballpark of around 44 Canadian dollars, so a little on the higher end, but they provide you exposure into urban properties, different types of developments, and parking facilities as well. So a lot of their infrastructure and a lot of their investments are located in major Canadian cities. So you never know. The next time you pay for parking downtown, you might be paying yourself back in the form of that dividend. Speaking of which, you're entitled to a 3.84% dividend yield, which is paid on a monthly basis. So the next time you park, you can park a little happier knowing that you're getting some money back as well. So when it comes to real estate investing, you don't need hundreds of thousands of dollars or even millions of dollars to get started. You can easily begin with about $14 to get your foot in the door. Buying things like Choice Properties, H&R, Smart Center, and Allied Properties, you can get a pretty good amount of exposure to commercial, residential, or industrial investments. And with that, you can get a monthly recurring dividend income simply for holding on to these real estate investment trusts. I hope you guys enjoyed today's video, and if you do, please drop a huge thumbs up and let me know in the comments below what you're doing when it comes to real estate investing. But until then, I'll see you next time.